We have seen both the benchmark indices, the Nifty and the Sensex, slide significantly in trade today. We've seen a weak session of trade essentially for all sectoral indices, and we've seen a broad-based sell-off in the stock markets today. Now, to decode all of this, we're joined by G Chokkalingam. He is the founder of Equinomics Research. Thanks very much for your time, sir. First, what really is the reason for this broad-based sell-off in the stock markets today?
One main reason is profit booking. From 2020 March bottom, Sensex has given 170% return, and small cap nearly 500% return, and mid cap 350% return. This is the first time happening this kind of return in the history, and so a lot of people are taking the profits. And valuation also, since the prices have jumped enormously, there is no valuation comfort. That is, profit growth is not justifying the rise in the stock prices. So these are the two set of reasons for today's profit booking and therefore correction in the market.
Right. Well, that's as far as the reasons today is concerned. But of course, many are also talking about, is there a sense of nervousness ahead of the budget? Do you see this as volatility just ahead of the union budget 2024-25? What are your thoughts?
Nervousness is not there, because nervousness is there, then the market cap should fall at least 10 lakh crore. That's what we saw in June first week. So today just 2-3 lakh crore fall in the market cap. So there is no reason, but fear is there. Fear is there because of the run up in the stock prices and also the budget. If you see last 10 years, either before budget or after budget, market tends to correct. So that fear is there. And now we have to see next 10-15 days whether that fear increases. The chances are that the fear will increase and the market might correct, because as I said, the Sensex has risen 170% from March 2020, and the small cap has given a 500% return from 2020 March. So this kind of return we have not seen in the last 15-20 years. Even in asset method bull run, we have not seen this kind of rally. So therefore, there is a more chance of the fear increasing and people coming to market and booking the profits, and therefore market correcting.
Right. So what would your advice then be to those sitting at home, investors at large, who are tracking this space very closely ahead of the budget and perhaps after the budget? What sectors would you be bullish on? What would you say to them?
Historically, if you see last 17 years, always small cap, mid cap, after rally, they fill badly in 2 to 3 years time frame. This is the first time the rally is continuing for 5th year in a row. So therefore, the suggestion is that reduce the exposure to small and mid cap, increase, if you have say 100 rupee in the equity, see that at least 50 rupees put in the Sensex and Nifty stocks or top 100 large cap stocks. Balance also keep 5-10% cash, so that if there is any opportunity post budget or pre-budget in terms of market fall, you can use it. And the balance of 40%, invest in a very good quality small and mid cap stocks. So one simple common sense rule is that if you are paying 50 times the price to profit per share, see that the profit grows at least by 25% per annum. So this is a simple thumb rule, common sense rule. So ensure that the good quality stock you pick up, still the balance 40% can put in small and mid cap, because in the long term, a lot of wealth is always created by small and mid cap stocks.
All right. And lastly, we can't let you go without asking you, okay, what are your budget expectations at large?
Budget, this time, perhaps for the first time, the budget may be pro people oriented, welfare scheme oriented, and there could be some tax concessions. So these are the measures which may not be too good for the markets. So that is why my fear is that either before budget or post budget market should fall. So considering the recent political election results, I feel the budget could focus more on welfare of the people, tax concession. So therefore, for market, there is some risk.
All right. These, of course, are just estimates at the moment. Thanks very much for sharing your thoughts and for joining us for this discussion.